All right, it looks like the additions to the meeting have slowed down quite a bit. It looks like we have just about everyone on at this point. David, why don't you go ahead and take it away?
Sure thing. Hello, everybody, and thank you to everybody who's joined us for today's presentation. Our topic today is 10 ways to improve your cybersecurity insurability and minimize rates on your cyber insurance renewals. So our presentation today is a joint effort between Hayes Companies and Loeffler. Get on the right slide there. Hayes Companies and Loeffler Companies. From the Hayes side, I'm Dave Wasson. I'm a vice president in our executive risk group, and more relevant to today's discussion, I lead our cyber insurance practice. If you're unfamiliar, Hayes is an insurance and risk management firm headquartered in Minneapolis, Minnesota, and we have offices around the country and are part of the Brown & Brown team of companies.
All right, and I'm Randy Anderson. I manage our cybersecurity and IT consulting department at Loeffler Companies. And Loeffler is the largest privately owned business technology and services organization in the upper Midwest. Many of you know us for our copier and imaging, but we also do quite a lot in the IT space as well.
Perfect. Thanks, Randy. So for our agenda today, we're going to talk first about the cyber risk landscape. Where are we? Where are things going? Then we're going to get into our top 10 recommendations that just about any company can do to improve their cybersecurity posture. And then lastly, Randy and I are going to have a little bit of a discussion on the idea of paying ransoms, right? It's a hot topic. A lot of people object to it fundamentally, but we'll have, I think, a realistic and pragmatic discussion on whether or not we should entertain the idea of paying ransoms. So to first start with the insurance, the cyber insurance landscape, without a doubt, this landscape is difficult right now, and in my opinion, probably the most difficult it's ever been. Losses are increasing in frequency, increasing in severity, and they're also increasing in variety. That's why it's so important to take a fresh look at your security practices and why we thought it was important to present some options to reduce the frequency and the severity of losses, as well as minimize increases on the cost of your cyber insurance in 2021. So again, we'll start with the cyber risk landscape and get into the insurance market. So it might not be a surprise that the cyber insurance market, just like other areas of the insurance market, is pretty difficult right now. Many insurance companies are either at or above the 100 combined mark on their cyber portfolios, which is the sum of underwriting losses and overhead. Below 100, the carrier's making a profit. Above 100, the carrier's losing money on that line of business. When carriers approach or exceed the 100 mark, rates tend to increase. So in 2021, most buyers will see an increase of 20 to 50% on cyber premiums. Although certain natures of operation and companies without certain controls might see increases that can be triple digit. Essentially, every carrier is practicing what we call limits management. Underwriters that used to offer $10 million limits pretty liberally now offer a maximum of $5 million. And in some cases, an underwriter might say, good news, I can keep the policy premium flat. Bad news, though, that price is now for half as much limit. Other carriers are attempting to manage their losses by either offering a sublimit for ransomware, where the overall policy limit might be $5 million, but ransomware losses are capped at $2.5 million. Sometimes they're applying co-insurance to ransomware losses, where for every dollar of loss above the deductible, the carrier pays 50 cents and you pay 50 cents. And in other cases, we're seeing exclusions related to government mandated shutdowns. I'm sure we'll see more changes before the year's over, both due to the losses that have already occurred, as well as some that have yet to occur. And in the last bullet point of this slide, the standards for what is considered good cybersecurity are also increasing. That's the motivation for today's presentation, offering some guidance on those best practices that'll both reduce your frequency and severity of loss, but also help you avoid some pain on cyber insurance renewals throughout the year. So the big question on this, I think, to start with is why? Why is this happening? And what's the justification for it? So the idea of cyber risk has existed for a very short time in the timeline of transferring risk. It was only about 28 years ago, 1993, that we still had AOL sending 3.5-inch floppy disks to people's houses and offering a few hours of free internet access. Everyone attending this webinar has had a front row seat for this cyber revolution. And for many of us, we've seen the entirety of it in our lifetimes. We also see the speed of that innovation increase. And on one hand, we've seen some amazing improvements in quality of life, in efficiency of business, and a number of other areas, but very few things can be purely positive. That cyber revolution has been largely positive, but has inherent negatives as well. 30 years ago, if you wanted to rob someone, you had to get dressed and leave the house to commit your crime. And who knows, you might try to mug somebody who was a Golden Gloves boxer. Crime used to involve much more risk. Today, it's possible to commit large-scale financial crimes from the comfort of your own home. And I think this timeline is important because it helps to explain why this is so turbulent. Unlike essentially every other type of risk, cyber has existed for such a short time that we don't have the same level of actuarial data that exists for things like property losses. Some of the traditional types of coverage, life insurance probably being the easiest example, have existed for hundreds of years and the risks haven't materially changed. In the cyberspace, however, these risks are changing rapidly. Nearly as soon as the market felt reasonably able to model losses of personal information, ransomware and variants of cybercrime came along and broke those models. But also, our country's regulatory framework, specifically the things our regulatory framework lacks, such as mandatory reporting of ransomware attacks or payments, make it impossible to paint a full and clear picture of the ransomware threat. So this data is somewhat inherently fractured, and we're putting together puzzle pieces. But we do have some data. When the ransomware trend started in 2017, average payments were meaningful but not extreme amounts, typically between $50,000 and $150,000. Over the last year, the most common payments that we're seeing average between $500,000 and $1 million, and we're seeing more and more of those events that used to be outliers and are today becoming more common, where a firm pays a 7 or even an 8-figure ransom. So the chart on this slide shows the average payouts of the top 5 ransomware variants as of Q4 of last year. So starting with REvil at an average of $289,000, going up to NetWalker at $427,000, Maze at $596,000, Ryuk at $1.1 million, and then Wasted at a whopping $3.6 million. We also know that companies in the United States are the recipients of about 60% of all global ransomware attacks. We know that ransomware losses in 2020 exceeded $20 billion, which was up from $11.5 billion in 2019 and $8 billion in 2018. And we also know that these losses affect all natures of operation: government, manufacturing, construction, utilities, professional services, retail, real estate, hospitality, healthcare, education, financial institutions. It's across the board. And it's also important to remember that ransomware is a crime of opportunity. The most attractive target isn't the one, the most attractive target is the one that can't stop the attack, not necessarily the company with the most data or the most cash. We also know that business email compromise, most frequently social engineering losses, scam fund transfer emails involving a fake CEO, fake CFO, fake business partner, approached $2 billion in 2019 with average losses of $75,000, and that's expected to have grown to almost $3 billion, 2.7 to be exact, for 2020. And these losses are a bit different than others, whereas sophisticated hacks and data breaches require genuine technical skills. Social engineering scams only require an internet access and a willingness to lie. This year has also renewed a focus on systemic cyber risk. In the recent past, we've had some of the most concerning security failures in the history of the cyber topic. In early 2020, hackers from Russia, and according to recent news, possibly also China, broke into a company called SolarWinds and installed malicious code on one of their products called Orion. The Orion product was used by 80% of the Fortune 500, the 10 largest telecom providers, all 5 branches of the military, NASA, the CIA, the FBI, the DOJ, in total about 33,000 clients. So when Orion was remotely updated, this meant that that version of the software that was compromised by hostile state actors, which was pushed to some of the most meaningful companies and agencies in the country. The recent hack on Microsoft Exchange was very similar. Chinese state actors compromised Microsoft's Exchange email service and exposed tens of thousands or possibly hundreds of thousands of US companies and agencies. Once that hack was made public, a second wave of attackers then tried to exploit the same vulnerability. The extent of these events isn't currently known and realistically may never be fully known, but it's validated a concern that insurers have had about systemic risk. Even if you're secure, every company relies on third-party technology providers, and when those third-party technology providers suffer, it can cause a breach at your company as well. So that's the landscape as it sits. I know it's been a very negative couple of minutes, but let's talk about the positive. All right, every single company has options at their fingertips that can stop the majority of these threats. And as an insurance broker, something that's near and dear to my heart, it can minimize premium increases. So Randy and I have put together a list of 10 items to help improve a company's security posture and also minimize any increases on 2021 cyber insurance renewals. So we've got the list here on this side, going down the list, assessing your information security posture, implementing out-of-band authentication, creating a set of information security policies, creating and practicing an incident response plan, reviewing recovery time objectives, disabling remote desktop protocol, enabling multi-factor authentication, implementing effective logging, performing vulnerability scanning, and lastly, implementing endpoint detection and response tools. So on the next slide, Randy.
Thank you, David. This one is near and dear to my heart here, and I just want to mention one thing before I get into this, and that is that if you have any questions along the way, please pop them into the Q&A section, and then David and I will endeavor to answer those a little bit later in the presentation today. But assessing your information security, I think this is something that absolutely every company needs to do, and there are a lot of ways that you can do this. Vulnerability scanning is in one area where we actually have a separate slide on that a little bit later, but that really involves just a technical assessment of vulnerabilities in the environment. Penetration testing, of course, goes a little bit above and beyond that. And I would say that for the vast majority of people, penetration has a place, and it fits certainly into your overall strategy. But it should be used judiciously. If you have a compliance requirement, definitely do that penetration test. If you don't have that compliance requirement, there are maybe some things that you want to do before you engage in a full-scale penetration test, just to make sure that you're getting the best value out of that. There are some free assessments that are included right in the Microsoft 365 and Microsoft Azure environment. So the Microsoft Security Center will give you a risk score based on how things are set up, and that's accessible to you. It is something that sometimes can be a little bit hard to interpret, and there are some implications, though, for implementing some of the changes that Microsoft recommends. Some are more, more or less impactful to end users, and so it should be done with great care in terms of implementing some of those suggestions. As part of some of the engagements, we have a business impact analysis. Sometimes that will lead to an asset-based risk assessment or a scenario-based risk assessment, really just sitting down with the stakeholders in the organization and understanding if certain events happen, what is the impact to the environment? What is the impact to the company? And one of the things that we like to do with our customers is begin with a very comprehensive and formal assessment. So we do have an assessment that we perform, which takes a look at administrative controls, which are people, policies, and processes. That's how I think about that, heavy on the policy side of things. We take a look at physical controls, cameras, door locks, lighting in the parking lot, those sorts of things. We dig into internal technical controls. That's really how the information technology is managed. We bring in a vulnerability scan as part of that typically. And then we take a look at external technical controls as well, firewall, DNS, social media, file sharing sites, and so forth. Each one of these assessments has a role to play, and it's important to understand that not all of them are comprehensive, but I do believe that that last item is a great way to get a baseline of your security posture.
Perfect. Our second recommendation focuses on social engineering losses, and I'll happily note that this recommendation is absolutely free to implement. So as a reminder, social engineering fraud is typically when somebody with the authority to transfer funds receives an email that purports to be from somebody with authority, typically a CEO or a CFO, but sometimes also a business partner. And that email will usually say that the request is time sensitive. They may demand secrecy because of something like Sarbanes-Oxley or because it's money that's meant to buy a competitor. Or sometimes the fake business partner will say that it's for a time-sensitive invoice that might be past due. They'll also frequently attempt these scams when the actual person is out of communication, out of the office. In 2021, it's not difficult to figure out who's traveling. Maybe you didn't mention your vacation on Instagram, but your spouse or your kids might have. And a bad actor can figure out if you're out of the country or out of communication. And there's another common thread in over 90% of successful social engineering scams. People don't pick up the phone and verify that the instruction is legitimate. And I think that makes sense. Nobody wants to question the CEO or the CFO. But it's absolutely essential to implement a process where funds transfer requests are verified over the phone, and this next part is important, at a previously validated number by a person who knows the other person's voice, the voice of the person who's allegedly sent the funds transfer request. And I can appreciate that this might seem annoying to certain accounts payable departments or certain finance departments. Nobody likes to do extra work or have extra regulation put into their job, but it's also a free and very effective way to stop a huge portion of social engineering scams. There's a handful of other actions that can supplement this as well. So you can consider adding a dual authorization requirement in addition to the out-of-band authentication requirement. That simply means there's a second set of eyes. Someone else verifies that the rules were followed before the funds can go out the door. There's also a number of phishing simulation tools available. So these are platforms you can use to phish your own employees, and you can track the rate at which they click those fake emails. And of course, we hope that rate goes down over time. If somebody does click the fake phishing email, congratulations, they just earned some additional training. You might also consider adding additional layers of email security. So we won't go into a ton of detail on these today, but you can also consider adding Sender Policy Framework, SPF, Domain Keys Identified Mail, DKIM, and domain-based message authentication reporting and conformance tools, DMARC, to further strengthen your defenses against social engineering attacks.
Well, anyone who's worked with policies, or many people who have worked with policies, might think policies really aren't a lot of fun. But they are important in that they guide the organization in terms of the technology choices that they make. They guide the organization in terms of how to craft procedures and plans that are very specific to the way that technology is adopted and implemented. So we see policies as kind of the top of the hierarchy. The policies exist to provide guidance to those within the organization who are required to select solutions and implement solutions. One of the things that we frequently talk about with our clients is that shared risk model of cloud computing. And often it comes up, the topic of backups come up. And we still hear sometimes we don't have to worry about that because we have all of our servers out in the cloud or all of our email is out in the cloud. And that may or may not be true. And the way that this relates back to backups is that, or to policies, is that the organization really ought to have a policy that defines the data retention requirements so that you can then go forward and match up your data retention requirements to the service provider. Microsoft Office 365, M365 is one example there where you have, by default, a 30-day backup window. And that may or may not be adequate. SLAs are another concern here too, and frankly, there isn't much that you or I can do to influence those SLAs with Microsoft, but all of that information is available, and that information can be taken into account in terms of building and evaluating those policies relative to those technology decisions. Compliance requirements often come into the policy stack, of course. You want to make sure that any of the legal requirements that you have are met, and the policies, of course, should support those. Consider today, too, the insurance underwriting standards. In order to get the best policy possible, to get the best rate possible, make sure that your policies are addressing the requirements of your insurance company. Most organizations that we've worked with will typically end up with maybe 15 to 25 separate information security policies. And these may range from a clean desk policy to an encryption policy to a data retention policy, password policy. Those are really just some of the common examples that we see. And again, maybe on the order of 15 to 25 of those distinct and separate policies. So one of those policies, or part of the policy stack, is to create an incident response plan. And jumping down to the last bullet on this one, if you get hit with encrypting malware, can you even get to your incident response plan? So I'll just kind of leave that out there. But we think that the incident response plan is very much integrated with the business continuity plan. It really should include all of the information that's going to help you in the event of a crisis, including key contacts in terms of software vendors and even access to the building and utility providers, that sort of thing. The most important thing is to start writing it, write it down. And this doesn't necessarily have to be the most formal thing. I think that you'd be well served by writing down a 2 to 5 page plan. If you don't have anything right now, just start by writing it down. Start by writing down those key contacts, the insurance company, the contacts with your software and hardware providers, et cetera. And then practice it. Do some tabletop exercises and get some stakeholders around that table or that virtual table and poke holes in that plan and crowdsource the information that's needed to improve that plan. Once you've conducted those tabletop exercises, definitely sit down and understand the lessons that you've learned, write those things down, improve your plan. And then once you've done that, make sure that you're reviewing that plan at least annually. And then that final bullet point, if you are hit by encrypting malware, can you even get to your IR plan? Make sure that it is stored in some way that is accessible if your internal servers or even cloud-based servers are hit by encrypting malware.
So this next topic builds on the idea of having a robust set of basic policies, specifically the business continuity plan, and more specifically, one that contemplates electronic events. Many companies will have business continuity plans that contemplate events like fires and tornadoes and floods, but we don't see nearly as many companies asking, what will we do if we get hit with malicious code or ransomware? So a company's recovery time objectives are the measure of time that it will take to restore critical systems before they experience significant losses or other pain. And in our experience, the most common response to these RTO questions is that a firm expects to recover in 12 or fewer hours. Most insurance applications will have boxes to check or tick for time periods up to 12 or maybe in some cases 24 hours. But when a firm suffers a ransomware event, we often find that these RTOs are exceeded by multiples, sometimes up to 50 or 60 times the expected outage. So the average downtime is increasing and is currently 21 days, but the responses on these applications aren't changing. So we've stepped back and asked, what gives here? And I think this really highlights a communication breakdown between information technology and the C-suite. So these RTOs are typically set assuming a best case scenario. That scenario involves a clean environment, no active bad actor, and a viable backup with minimal need for validation. But none of that describes a typical ransomware event. Even when a firm pays a ransom and obtains the decryption key, that key may take several days or up to a week to run. And then the process begins of validating that data and restoring any digital assets that weren't decrypted. In total, the average downtime in a ransomware event is 21 days, which is up about 11% from Q3 of 2020. And mind you, 21 days is the Q4 number. The cyber insurance products available can help provide external legal and technology consultation and even cover the loss of net income during an outage. But even the best handled claim might be frustrating if expectations aren't adequately set and met in discussions between information technology and the C-suite. And of course, this is a scenario where an ounce of prevention is worth a pound of cure. Of course, we would prefer not to have these events happen in the first place.
RDP access or Windows Terminal Services, remote desktop services, it's a method of allowing your end users into your corporate environment, into the server environment through the firewall. And what we've seen over the last few years especially is that this has become a major attack vector. And if we rewind the clock just a little bit, I think 10, 15 years ago, it was common to leave this port open. It was probably still not a good idea, but the threats just weren't quite to the level that they are right now. And so I would say, even if you change that port that RDP is presented on, even if you don't have a DNS name associated with that server, even if you've patched it, even if you use good passwords, there are exploits that can be played against this RDP service. And even if you don't think you're a target because you don't hold pounds and pounds of gold, tons and tons of gold, or anything like that, you are still a target for these encrypting malware events. And so please work to shut down access to RDP services. One of the ways to secure RDP services is simply to put it behind a VPN, behind your firewall with a VPN connection. One of the most surefire ways of guarding that RDP server while still allowing your end users to have access to the services that they need.
Our next recommendation is to enable multi-factor authentication. And first, before even explaining what multi-factor authentication is, I'm going to say that for those of you that purchase cyber insurance or are thinking about purchasing it, this is the single most influential factor in cyber insurance underwriting right now. It might not negate the reality of a hardening market, but it can be a massive contributor to whether you see a fairly standard market increase or you're subject to a triple-digit increase and a number of declinations on your marketing summary. So beyond that, I think we should start with a quick explanation. If you're working from home and you attempt to sign into your email, and you can sign in with a username and password, that's called single-factor authentication. Your username represents you, and your password is the single factor that authenticates that you are in fact you. Some of you might be familiar with login screens like the one I've snipped here, where you need a username, a password, and another item, typically a code that's generated by an app, by a token on your keychain, or by a text message. That's multi-factor authentication. We have a username and then two factors to authenticate that you are in fact you. The problem with single factor is that it's susceptible to numerous types of exploits. Whether it's a set of live credentials that was compromised in a third-party breach, whether it's credential stuffing, brute force, or another form of attack, single factor authentication just isn't very secure. There are tools available that track third-party data breaches. For example, on the right side of the screen here, I can show you every instance in which somebody used their Hayes company's email to register an account, and that account was compromised in a data breach. And in addition to that, I can see the types of data that were lost. So in general, there's two instances where it's absolutely necessary to use multi-factor authentication. And that's remote access, such as when a person is working from home, and for users that have privileged access, such as when an employee has local administrative rights and is able to install or delete programs. So the need for multi-factor authentication for non-privileged users isn't nearly as strong when the user is not working remotely. If you are on premise in the office, the general thought is that there are physical security checks, like Randy mentioned earlier. For example, when I go into my office, we have employees at the front desk. We have key card access to get to working areas. And frankly, my coworkers know what I look like. If somebody got into our offices and sat at my desk, it wouldn't be very long before they were caught because they don't have my face. And lastly, I'll mention, in some cases, enabling multi-factor authentication is as easy as clicking a box in Office 365 and telling your employees to download an app on their phone. This is a low-cost way to both massively increase your security posture or improve your security posture. And again, it's one of the factors that underwriters are paying attention to most closely in underwriting insurance in 2021.
We have one question, if you could go back briefly there, David. We have one question related to multi-factor authentication. And the question is, what are insurance carriers referring to when they ask, do you have multi-factor authentication? And that is one where I would say email, Office 365 email is probably one of the primary examples there. The VPN access that we talked about before as being a way of protecting your RDP environment. VPNs should also have multi-factor authentication. And now, of course, we're operating in a cloud-forward era. And so really any service that you're using that's a software as a service application, that should be part of the evaluation. Does that service offer you multi-factor authentication? David, do you have any other examples there?
Yeah, I would broadly say, I think email is the foundational answer. There's no question that everybody's email on a remote basis should be subject to MFA. The other instances are largely going to be dependent on the context. So, for example, in my role as an insurance broker, I can't access our billing systems or our policy and document management systems unless I have gone through a multi-factor authentication process. Obviously, in other industries, that's going to be a bit different. But largely, I would say if something is remotely critical, then I would likely err on the side of saying it should be on the other side of an MFA requirement.
All right. We have one more question related to MFA, and that is how do you handle MFA when users cannot remember their own password and it makes it difficult to enforce enabling it across the company? I think this is a little bit of a complex conversation. The recommendations from the security community are definitely changing here. The bottom line, though, is apps. Apps make this something that's a lot easier for people to handle. Using the example of Microsoft and Microsoft M365 specifically, Microsoft has an authenticator app which you load on your phone, and it makes that second factor of authentication just as simple as pushing a button or answering a simple question to get authenticated. There are other multi-factor authentication technologies that employ similar solutions. All right, next slide, please.
There we go.
Okay. Effective logging. This is something that is, really important in the event that an incident response team is brought in to determine whether or not a breach has occurred, right? And so logging is dependent on the system, and it's dependent on a lot of different factors. But by and large, one of the things that we see from time to time is that the time isn't synchronized across different devices. And so it's very important that each device that is doing logging within your environment is synchronized to the same external time source, so that we can correlate any of the events that occur in your environment and look for patterns that might have happened at the same time. Another thing to think about here is to make sure that you're keeping the logs for a minimum amount of time that's going to be useful. Again, I'll go back to your policies. Your policies will dictate this, but a good practice is at least 90 days of log retention so that you can see the events that have happened leading up to the incident that you are concerned about. I think that longer retention is certainly warranted in many cases. And you may again have some legal or regulatory requirements in this area too. Another question that we often ask is who is watching those logs? It's important to have that logging data. It's important to keep it for a while. But is it even possible for a human to watch those logs and respond to the events and research all the events? And I would say that no, given the volume of logging data that we would assume you're getting from each of your different systems, it's impossible to have a human looking at that. And so a security information and event management solution is probably something that you should be looking at. And really that brings machine learning to bear on this problem. It allows for pattern matching. It allows for event correlation. It allows the system to sort out a lot of the noise and really raise those alerts to the correct people and escalate them to the correct people. So logging and SIM, I think those are some things that people should be looking at very seriously right now in terms of reducing their risk. We talked about all the different assessments that are available, and vulnerability scanning is one of those important checks and balances. It allows you to determine whether or not your patching solution is working, your software patching, your operating system patching is working correctly. It also helps you check to determine whether the procedures that are in place, dictated by your policies, are being followed by the people that configure your system. And so this looks for vulnerabilities that relate to missing patches, but also to misconfigurations that might occur in your environment. This may also be something that's required. An annual vulnerability scan is often required by different cybersecurity frameworks and different compliance regulations. The vulnerability scanning uses a tool that goes out and detects, it's a software program that goes out and detects all of the devices that are present on your TCP/IP network. It enumerates those devices, and then it identifies those devices or fingerprints them, looking for patterns that indicate what the operating system is, what major revision of the operating system, what patch level. And then once that operating system and patch level is known, then the tool can probe for different vulnerabilities. These vulnerabilities are summarized as CVEs, common vulnerabilities and exposures. They're rated as critical, high, medium, and low. Under the prior rating scale, there's even a none category for the new rating scale. But CVEs are a common language that are used by security professionals to understand the risks that exist inside your network.
And then our 10th recommendation is to implement endpoint detection and response tools. So as malware, specifically ransomware, becomes more sophisticated, there are still many instances where traditional antivirus just isn't sufficient. Antivirus is effective against known types of malware, and variants of that malware can bypass antivirus tools. We're currently seeing about 20 billion in losses annually. So this is where we enter the endpoint detection and response tools, which going forward, I'll just refer to as EDR. So these products are scaled. Level 1 EDR products will collect information, but they still leave you with the obligation to search through the issues that the EDR tool flags. And when this type of tool is in place, underwriters might ask if your company is staffed to handle this flow of alerts because it can be overwhelming. More sophisticated EDR tools will include artificial intelligence that can prioritize alerts based on anomalous activity that it detects. And the highest level of EDR tools will include third-party services where somebody else on your behalf will proactively hunt for these threats. So this might not entirely stop a ransomware or other malware intrusion, but EDR solutions can minimize the blast radius. It can limit the number of affected machines or assets, and that can mean the difference between a bad day and a bad quarter or a bad year. Now, I do want to be clear on this item. We intentionally put it last on the list, not because it has the least impact, its impact can actually be enormous, but because this is our most costly recommendation. The cost will obviously vary based on the provider, the number of endpoints being protected, the length of the contract, and a number of other factors. But a company can reasonably expect that about 200 users will cost at least $25,000 per year for this type of technology. So that brings us to the end of our 10 recommendations. What we thought might be interesting is a little bit of a peek behind the curtain and some discussion on the reality of paying ransomware. So I think we can start with the obvious, on a moral and ethical ground, moral or ethical ground. I think basically everybody hates the idea of paying ransoms, but I'm not sure that the obvious answer is don't pay. I guess to start, Randy, do you have a different feeling than the obvious answer not being don't pay?
Well, I truly believe that a company should do whatever is in their best interest to get the business up and running as quickly as possible. And I think reflexively, many of us have had that sentiment that you described, David, where it's morally repugnant to pay that ransom. There may simply be no other choice. And I would always say be more proactive if you can, right? And then that's what this presentation is about today. Make sure that those backups are in place. Make sure that the retention requirements are well known and that is being acted on. But there have been certain situations where those backups have been running perfectly and for whatever reason they aren't available. So the only choice that an organization has is to pay that ransom in order to get the data back. I still believe that it should be the last choice. And one of those reasons, notwithstanding the moral objection to that, is that it can take a long time. Simply getting those decryption keys is a time-consuming process, could take several days. And then actually running the decryption against the data. The speed of that action is dependent on how much processing power and disk subsystem I/O is present on those systems, and it could take several days to several weeks to decrypt that data.
Yeah.
David, what are your thoughts?
Yeah, I have a similar feeling. I mean, I think it's somewhat of a tragedy of the commons situation, right? What might be reasonable or best for the individual might be bad for the group. And so I do feel somewhat conflicted about that, right? We know that ransomware funds criminal activity, it funds hostile nations, it may possibly even fund terrorist activity. And when I look at other examples, obviously I'm in the insurance industry, so those are the examples I look to. I don't think people in the auto insurance industry feel conflicted about the idea that paying to replace a stolen vehicle encourages grand theft auto. But I do feel somewhat conflicted about the overall impact of paying ransomware. That said, my first obligation is to my client, and in many cases, their best, sometimes only option is to pay. And I think part of the motivation for webinars like this one we're doing right now is we would like to decrease the number of instances where that necessary evil, paying the demand, makes sense. And something else I'll point out is I work with a number of firms who take a very hardline stance. They say, we simply will not ever pay ransoms. And I do sometimes wonder how this will work if they find themselves in that situation, right? There's a quote from Mike Tyson, weird enough to quote Mike Tyson on an insurance and technology webinar. But the quote is, everybody has a plan until they get punched in the mouth. And I have seen a number of companies that said they were absolutely opposed to the idea of paying, but when they find out that they're left with no choice, they end up conceding and ultimately paying. So I've noticed there's a couple questions that have come into play. So the first one, how does insurance come into play? So on the insurance side, policies don't typically make any sort of moral or ethical judgment about paying ransoms. So the way that most policies are written will simply say, if it is reasonable and necessary, then we will pay. Now there's obviously an extra expense element where the cost for outside legal and forensic experts will be included, and part of that is to make sure that we know what our options are. And it is a relatively new trend. You know, we see if you were to look at loss data from prior to 2017, you would see zero or near zero ransom claims on anybody's cyber portfolio. If you look at carriers at the end of 2020, 12/31/20, I can tell you that many carriers are paying about 40 cents per dollar of loss in ransomware. So we've seen that increase from 0 to 40 in the span of less than 48 months. And that's not because other parts of the pie have gotten smaller. It's simply because the pie has gotten bigger to accommodate this extra 40 cents per dollar of loss. So it puts people in a very difficult situation. And then the third question that I think has come in: what if a company is breached and data is stolen and is being held for, I believe it meant to say ransom? We do see a fairly high correlation between those sorts of events and a company paying for proof of deletion. So when I look at claims data, what we find is about 1/3 of paid ransoms in 2020 were related to paying for proof of deletion of data, which is, I think, something that doesn't get as much attention as it maybe deserves. And I appreciate you for bringing up that question. But that is something we see happening too. It's not always that your screen goes dark and somebody says, pay me this much cryptocurrency or I'll break everything. We also see situations where somebody says, I stole all of your information, and if you don't pay, I'm going to release it on the internet. And often they'll pull the mafia move of, sending a finger or something like that and say, here's a little snippet of the information that we stole from you to prove that our threat is real. And in that situation, companies often don't have an option, right? They're in a situation where it's not a matter of restoring from backup. It's not a matter of business continuity. It's a data breach for ransom. So in those situations, obviously, an ounce of prevention is worth a pound of cure. We have to prevent the people from getting that data in the first place, because once they have it, it's already out in the ether. There's nothing we can do to turn back that clock.
David, this isn't something we've even talked about, but we're dealing with criminals here, right? In this discussion, and that last discussion point about the data breach, the data being exfiltrated and being part of the ransom discussion. How often do you see companies being targeted again after already having been paid, having paid the ransom?
I wouldn't say it's the lion's share of claims. It is a minority of events. Okay. But when it happens, it is a very, very sensitive event. As you can imagine, the board and the C-suite are not happy about it. Mm-hmm. And in my experience, they will typically swing for the fences on that second attempt. It's something that nobody likes to see happen, but that reinfection, or more accurately, a failure to stop the first infection, it does occur. I would estimate probably in a percentage in the teens of total events. But those events are particularly ugly, and a lot of people don't look very good when they happen.
I've been thinking a little bit too. We've been talking a lot about the dollars and cents of these types of events, and certainly the title of the presentation today has a lot to do with minimizing the cost around insurance. But I think about the misery that's caused, right, for the IT people that I work with, the people who don't get to go to sleep for 24 hours straight, right, and who are dining out of the vending machines during these types of events and so forth. And I think about the effect that it has on morale. So I would challenge everyone to think beyond the dollars and cents in terms of what disruption this could bring to the environment, to the employees, to the business.
And to customer relations. I mean, if my email was down for 21 minutes, I would probably get anxious. If it was down for 21 days, I don't know what I would do.
Yes.
But I'm inclined to think that it would, in some way, harm my relationship with my clients and my business partners.
Yeah. Well, David, I really appreciate you addressing that. I think that's ransom. Paying the ransom is something that comes up. The question comes up very frequently. People want to know where the insurance industry sits on that one. And I do appreciate you being forthcoming on some of those subjects there. Yep. At this point, it looks like we've got about 6 minutes left in the hour. And I would ask at this point, do we have anything else that people want to talk about? Are there any other questions from today's presentation? If so, please put them into the Q&A and we'll try to address those.
Give that a couple minutes.
Yeah. David, do you have any further comments related to the ransomware discussion while we're waiting for people?
Yeah, I mean, it's just the overall message is it's tough. And I think a lot of companies that historically have not been on what I'll call the cyber radar. So they're not retail, they're not financial, they're not healthcare. I think a lot of companies historically viewed themselves as being off of that cyber radar and maybe haven't fully accounted for the fact that the landscape has changed. And so some of the most impactful, negatively impactful events that I've seen in the past couple of years have been at your non-traditional cyber insurance buyers. I'm talking about meat packing plants, transportation companies, manufacturers, distributors. We have a claim recently that occurred to a fairly small company that is essentially they run photo operations. They take pictures for people. They got a $3 million ransom, and I think that was more than 10% of their annual revenue. So again, you don't have to be one of the largest banks in the country or one of the largest healthcare systems or a mega retailer in order to be susceptible to this. It's happening to everyone. And in fact, the majority of these events are happening in the small and middle market, south of $1 billion, south of 500 million, south of 100 million in annual revenue.
Yeah.
So there was a question that came in after paying the ransom, what is the likelihood that decryption won't happen? So one of the interesting things here is that we see very, very few instances where decryption does not occur after the payment. And I've heard a few people basically attribute this to some sort of honor amongst thieves. I think it might more accurately be referred to as reputation management. So there's a fairly small, finite number of companies that investigate ransomware globally. And if somebody was to charge for a decryption key and then provide one that did not work, their reputation would be harmed amongst those forensic professionals. And those forensic professionals would then likely advise their clients not to pay those extortions in the future because you can identify both the variant of ransomware as well as the criminal syndicate. So in total, at least from the data that's available to me, just over 1% of companies that pay end up not being able to use the decryption key that they receive. Now, that's not to say that decryption keys are always perfect. They might be slow. They might only decrypt 90% of data. I'm saying they are they work to a material level if maybe not perfectly.
I'll take this next one. Do you recommend backing up Azure to a local appliance in case Azure gets compromised? There's a trend that has had developed over the last 15 years or so, and that is to back up to disk, right? So not getting rid of tapes. And so I bring that up because it illustrates kind of the change in thinking. Tapes are maybe seeing a little bit of a resurgence. I wouldn't say that they're becoming prevalent in the industry, but tapes really represent an immutable copy of that data, so long as they are, a write once, read many type of a data structure, and so long as they're taken out and taken off site and so forth. But I think really the concept of having that immutable copy of the data has to come into play here, whether you're trying to back up that data to your premise, to on-site, or whether you're trying to back that up to another cloud environment. So maybe your primary compute is in Azure and you can back up to another cloud-based service, possibly even, Amazon, right? Or any number of the cloud-based services. I'd be looking for an option to have an immutable copy of that data.
Yep. And Randy, I would agree with that. On the underwriting side, this is more so for very large accounts, companies who are north of $1 billion in revenue and paying hundreds of thousands, if not millions, for their cyber insurance. There absolutely is a trend of underwriters asking if a company has any intent or plans to move to offline disconnected backups, simply because we've seen so many instances where the ransomware infects that backup, and then it was essentially as if you didn't have the backup in the first place.
Well, with that, we've come to the top of the hour here, and I just wanted to thank everyone for participating. David, I really do appreciate the additional insight into the insurance business, and I think everyone here would appreciate that as well. So at this point, I'd like to say thank you to all of our participants, and we'll be signing off.